Welcome to another Technical Thursday where I take a look at the markets and I try to find a example of a technical principle that I can use in the live markets to teach to you guys. So in this one, we're going to talk about volatility contraction. Now, I tweeted this out yesterday that, hey, the SPY is getting really, really tight here. And I wanted to define that a little bit because I think people spend a little bit too much time focusing on patterns. They spend too much time kind of in the weeds of this pattern versus that pattern. Um, whether this is a bull flag or a pennant or whatever it is going on here. The fact is that price is getting tighter. So what's happening is we had this massive push right here because of this unwind carry trade, this massive push down, and then a bounce, then a little bit of a push down, and then a bounce here. But you can see that each of these bounces, they're getting a little bit smaller before price consolidates. And that makes perfect sense, right? It's kind of what we want to see in a bullish market or in a trending market. You want to see large volatility that gets resolved relatively quickly, goes and rests, and then there's continuation higher. Right now we're capping down a little bit, so it might not be the best example, but yeah, that's exactly what we're seeing. So it doesn't matter if it's a bull flag or a bear flag or a pennant or whatever it is. What matters is that you can note that price is getting tighter. Now, what if you're someone who's newer to trading and you really want a way to define this with an indicator? Well, this is what the Bollinger Bands are for, right? The Bollinger Bands were never meant to, and they were never invented to be this buy it here and sell it here. What the Bollinger Bands measure as an indicator is a moving average, and then how much volatility you have around that moving average. If you have a lot of volatility around the moving average, the bands widen up. If you don't have very much volatility around that moving average, the bands start to narrow. So you can start to see that here. If we use this as our starting point, you can see we have very wide bands, and then they start to narrow, and they start to get narrower, and they start to get narrower. So this is a good way to kind of graphically depict price. But let's go even a little bit further because that clutters up my chart. And I don't like having a cluttered up chart. So what we're going to add instead is we are going to add the Bollinger Band width. Now, what this does is exactly what it says on the tin, where it takes the width of the Bollinger Bands and just plots them down here below your chart. So for example, you can see when price started to spike down, volatility started to increase. So all through this period, we had increased volatility. That's when those bands were really, really wide. When we had this drop down, we had a little bit of a spike in volatility, but it's not as much as the one before. And then as price is consolidating here, you can see how low these Bollinger Bands are. It's almost the lowest it's been in a long time. We know that volatility is a mean reversion thing. If there's periods of high volatility, they generally get resolved with periods of low volatility and vice versa. It's pretty much just the way it goes. So knowing that, we can start to say, okay, if I'm someone who's looking to buy breakouts and trends, or I'm looking to buy, you know, more calm type situations, I'm going to wait for those Bollinger Bands to get very, very tight. If I'm someone who wants to trade in volatility and I want to trade an aggressive mean reversion system or something like that, I want to look for volatility to get very, very wide. So, for example, we'll use EVER. So this is one that that was alerted at StatsEdge Trading. So again, what I do is I run algorithms and I build the strategies. If you go to my website, it has this is the algorithm. This is each month's return broken down by month. So it's all open, it's all transparent. You can see the whole thing. And then what we do is in the Discord room or when I send the emails, I highlight names that I like the best because I want to take these algorithms that I'm working on and then I want to filter them down through just some basic technical analysis or fundamental analysis, whatever it is that you do, knowing that if you just trade the algorithms, you'd have an edge on the market. If you add some level of your own knowledge to it, you'll probably have a greater edge on the market. And now with something like EVER, you can see as this thing is pulling back, this came from our mean reversion algorithm, how much volatility is contracting here on the way down. Volatility is getting narrow, 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 narrow. And then, zoom in a little bit, right before, right here, on this candle right here, we start to get a spike. This is why the mean reversion algorithm is looking at this. It's saying, okay, things are getting a little bit extended from a volatility point of view. That probably means it's a good one to look at for some sort of mean reversion because, right, volatility was tight in through here and we had the breakdown. And then volatility started to raise. So this line right here is the entry price. And this is what happened the next day. I wish they all happened like that. Of course they do not. So what we do is if we go over just to the Discord room real quick, we have an alert bot. So what this does is it will send alerts to your watch, to your phone, to your iPad, to your smart fridge, wherever you can install Discord, it will send alerts. So I'm not watching the screens all day. I'm just waiting for these alerts to come through because I do all my work on the weekends. This alert came through at 1721. I bring up the chart. I didn't get in at that price. I got in around, go back here, I got in around as it started to bounce back up. Because again, that's what we're doing. We're looking for price to show it. So I actually brought up the Bollinger Band width. I noticed that we were getting that increase in volatility. And then I pop into my 30-minute chart. That's about as low as you'll ever see me go. We'll take off pre and post here. Take off pre, and then we'll take off, oops, and then we'll take off post, properties, post market. Right? And then so we had this bottoming tail. So as this candle's breaking above that bottoming tail around 1730, 1750, that's where I got involved just to say, okay, well, now worst case, if we kind of break and close significantly below 17, it's probably time to go on it. And you can see what happened after that. Again, I wish they all happened like that, but we were talking a little bit about, in the room, about people saying, hey, I'm looking to, sell this thing, even though in theory we should be covering on Monday. That's when the algorithm says you buy it throughout the week. On Monday, you sell it, and then you look for your new strategies after that. And a lot of people said, hey, I'm going to lock in some profits on this earlier. It was like a 12, 13% gain at this point in just a little bit. And I talked about that and I said, listen, things are getting very volatile right now. It could just go into a consolidation or it could pull back. So if you want to do that, absolutely, right? It's just, you're just going to have to be okay if the thing goes higher. I didn't, so I may look like the fool if we, gap down and sell off, but that's just the way it is. So look at these, try out your Bollinger Band width, right? Look for volatility or periods of low volatility if you're a trend continuation trader or if you're running a trend continuation system, because I'm both. Look for areas of increased volatility if you're more of a mean reversion trader. Not just alone, take that and add in certain indicators and do all this to make sure all of this makes sense to you. So I hope this was a good little lesson about how volatility mean reverts. Price generally doesn't as much, but volatility is a very mean reverting system. So start to take a look at that. Again, it's a very simple way to say, how do I define a base? How do I define when something's moving incredibly well? How do I actually just mathematically define that? So check out the Bollinger Band width. I hope you like this. If you did, share it around, and I will talk to you guys soon.